Hello everyone and welcome to another of our Trader Talks videos with myself, Richard Perry, Market Analyst at Hantec, and also Steve Miley, the Market Chartist. Hello again, Steve.
Hi there, Richard.
Thanks for having you again, Steve. Now, we're going to be talking about a couple of charts that we really think are playing this positive risk breakout that we've seen on markets, and we're looking at Aussie yen on the long side and also that breakout on the DAX we've seen. So we're going to be talking first of all about Aussie yen, and that's your chart, Steve.
Yeah, well, Aussie yen is something we looked at yesterday. You were looking at it and we had that breakout above the 70 level. The market's then since been in consolidation. We've kind of held around that 70 level. And then in the last 24 hours, we've had another really impulsive break on the top side, taking out the prior peak at 71.08, challenging this 71.50 level, and it really opens up significant upside in here from my perspective. The RSI, the momentum indicator, is kind of reinforcing, confirming the break higher, and we're not particularly overbought, so there's still upside from a momentum perspective. And really, I'm looking for a move at least up to that next level we've got up on the breakdown level, up to 72.40. It's going to be the initial target for me.
Yeah, I like the fact that we've had the range breakout. It was 67.50 up towards 70 big figure, so that's around about 250 pips. You project that upside and you get towards that 72.40 level of resistance, and I really like how we broke out, came back to pull back to the breakout level, and then it's gone again. It's a really strong technical setup for me. Really does play into this risk breakout that we've got, and I think it's a positive move that we can see going forward with the momentum that we have in markets at the moment. I think playing Aussie yen is a classic move on the risk appetite angle, but also the fact that the yen is now starting to underperform, and I'm going to see that I think continuing in the coming weeks if the markets continue to play this recovery in risk appetite that we've got.
Yeah, I agree completely. And I think there's an overshoot target all the way back up to that February peak up at 74.47. So talking about the risk on environment, let's take a look at the DAX, look at the equity markets, and I know you've been focusing on that.
Yeah, I was a little bit suspicious about how equities were performing, but certainly what we've seen is that range play that the consolidation rectangle had built up, and we're now seeing the breakouts to the upside. We've seen it on Wall Street, we've seen it on the DAX. The DAX is obviously a key risk on market, and what we've seen is the DAX breaking out above that resistance of 11,247. That effectively completed another, as I said, consolidation rectangle breakout around about 1,100 ticks of upside potential there in the breakout in the coming weeks, and that sort of implies around about 12,300 area as a target. And we can see that the move is coming with strong momentum. RSI confirming the move at multi-month highs, and I really do think that again we can see a pullback being a buying opportunity. Pull back to the breakout point of 11,247 is a decent buying area. You'd be looking for stops underneath that 10,867 reaction low. But I really think any sort of weakness, I think, on these equities are now going to be playing for a risk appetite improvement and a buying opportunity.
Yeah, I mean, I'd have to agree. I mean, the whole risk on theme is looking really good, kind of being led as well. The US stock indices really aggressively pushing higher. And I think the next one to really keep an eye on that could give us the next boost for the DAX is going to be watching that the Nasdaq 100. A break above its all-time high. We're only about 1.5–2% off the all-time high. Can you believe that, Richard? The all-time high. I mean,
yeah,
it's unbelievable. We're back up at the February peak, and we're only 1.5–2%. If we break there, that's going to grab the headlines. It's going to get those the passive investors coming back in, and we could see another wall of money coming back into US and global stocks, which will then reinforce this whole risk on move that we're looking at for both DAX and for Aussie yen.
Yeah, I agree. I think it's looking good. I think as long as you can continue to see the risk set up as it is at the moment with the vaccinations coming through, economies reopening, I think it's going to be important for completely playing on that long side.
Well, let's carry on and talk about the macro outlook then. So you spoke there about the whole vaccinations. That's obviously going to be a potential upside. And it seems that we're unlocking, right? We're going into this unlock of the lockdown, and it seems to be being done fairly successfully without any kind of second wave, right?
At the moment, I mean, that is obviously going to be the key. At the moment, the economy reopenings are fairly okay. UK tentative, you would say, but still we've seen Germany starting to come open, and that seems to be going okay. Also the moves that we're seeing in Japan coming in ahead of expectation and removing the emergency status. So it is an important step forward these economies are facing, but obviously there's always in the background some caveats, aren't there? And the caveats being the second wave. But interestingly, we need to keep an eye on the US-China relations. That has certainly the potential to derail some of this risk recovery. But I think at the moment, as long as those tensions do not boil over massively, I think we can still continue to play this on the long side for risk appetite.
Yeah, I think it's a really good point you make. The US-China tensions, everything that's developed in the last week regarding Hong Kong, adding to tensions that were already there. And I think, just overall, we're seeing in here markets kind of taking that on board. We did have a little bit of a negative reaction to that last week, but then kind of dismissing it as well. So unless we get a real escalation, there is still, a potential short to intermediate term top side. I guess the bigger picture thing on the macro side as well, though, is it's just when, at some point in the future, this accommodative stance that we have from both governments globally and also monetary policy accommodation, as that starts to get removed, then what happens to the real economy? We've had almost like a V-shaped recovery on stocks. That's just not possible, is it, for the economy?
Well, I mean, you say that, and I think we're in a world of accommodative monetary policy for a while to come yet. I can't see that being a significant issue for markets quite yet. I think until deep into 2021, really, for me. So I think that at the moment, as long as these reopenings of the economies continue to progress well, I think they're set up for a decent risk recovery.
Okay, it's been great talking to you again, Richard.
Thanks. Yeah, thanks a lot, Steve. There's another good chat that we've had, and hopefully we'll be providing some more ideas for you all next week, and we'll speak to you all soon. Thank you very much.